This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on August 29th, 2014. Our time is 8:51 in the morning. Our radio show runs on your favorite radio stations, 630 CHED in Edmonton, and good long weekend to everyone. Labor Day long weekend, kids heading back to school after the long weekend, although there are a few kids back to school a little early. Don't forget, we have a podcast as well, and the podcast is through iTunes. All you need to do is go to iTunes, type in the World Financial Report on Radio. You can find us there. We are portable. We're on your portable device and go anywhere you do. Harold has two websites, HESradio.com, rarecoloreddiamonds.com. Both of those sites stream the show. You can connect with Harold at rarecoloreddiamonds.com or by calling 1-800-432-1022. Don't forget to get our free weekly newsletter from Harold. It's the proprietary newsletter for the radio show. If you're getting any other newsletter, you're not getting the World Financial Report on Radio newsletter and seeing all the stories that Harold and I are on a weekly basis. So get your name on the list with Harold. We'll be happy to send it out to you via email, free of charge every week. As we start today's show, the Ukraine's prime minister saying that Russian troops have officially invaded his country. We're seeing gold and silver up today as a result of that. More bad economic news, data out of Europe. Confidence is collapsing. Yields on European government debt continue to plunge as a result. Markets are down across the board as we tape on Thursday. Also, there are fears about a major volcanic eruption in Iceland. And the World Health Organization says there could be as many as 20,000 Ebola victims before the current crisis ends. So some very serious news as we tape here on a Thursday morning. Don't forget, Harold was on Fox Business News, Risk and Reward with Deirdre Bolton. We'll talk about that later in the show. Be happy to send out to you the video of that. Also, Harold was on the Jerry Bonino Show, and we can send that out to you as well. In our newsletter this week, I know at times, and we've heard this from different sources, that our radio show is doom and gloom. And we've said many times that Harold and I are probably two of the most optimistic people that you will ever run across. But we feel we have an obligation to pass along what we're seeing so you can profit and protect the money that you earn. You work very hard for the money that you earn, and we want to make sure that you profit and protect that money due to what's happening in the world geopolitically and financially. And I thought it was interesting this week that Egon von Greyers was interviewed by King World News, Eric King. And this really summarizes, in my mind, where we are at as well. And Greyers says, some people may view the message coming from the experts on King World News as doomsday. You have some of the most perceptive freethinkers in the financial world being interviewed regularly on King World News. I know many of them personally, and I can assure King World News readers that these people are the most bright and level-headed individuals who are warning about the systemic risks that we face today. Like myself, they are not pessimistic and they don't wish for chaos. But we can clearly see enormous risks the world is now facing. The fact that these individuals are revealing these unprecedented risks as a whistleblower exposes corruption does not make them prophets of doom. And Harold, I think that's very important to keep in mind. For those that listen to us and think we're doom and gloom, it's not about optimism or pessimism, it's about realism. And this is a show all about realism. In fact, we have a letter, and this was sent to Gerald Celente, who's a trends economist, and he got this letter, and we want to let everybody know about it. It's from an individual in a furniture business, and it's very, very shocking. This is out of the United States. Now, remember, we're constantly being told everything is great. Dear Mr. Celente, I read your comments on King World News on the state of the economy. I think you are underestimating the severity of the decline we are experiencing. I am the sales manager for a very old, well-known furniture company. For the past 15 years, we have employed a sales staff of 6 very experienced salespeople. They have earned between $75,000 to $90,000 per year. We saw 30 to 50 people a day. Now we see 3 people a day, and our top salesperson earns less than $30,000. They would all leave if they had a place to go. All of our sales staff have owned homes for 20 years and are facing foreclosure. I am sure we will be closed before Christmas. The economy has slowed down. It has stopped. I'm not sure that we're very close. He says, I am sure we are very close to a total financial collapse. We are facing very scary times. The cure for obesity is right around the corner, and this person says hunger. That was a letter to Gerald Celente out of the United States. And Harold, you hear a story like that, and that's why we go on to say it's very important in the times that we live in that you have an insurance policy in your portfolio. If you think the risk of a fire is high, you buy fire insurance because you definitely can't buy it after the fire. That's why we advocate having an insurance policy, gold, silver, and diamonds in your portfolio today.
Randy, you're 100% right. And, the story that was written to Mr. Celente is true, because that is the norm of what's happening in the United States at this point. Obviously, if you watch Wall Street or you watch CNBC, you're going to get a totally different view. Wall Street is doing well. It's hitting records almost every day. People are shaking their heads saying, how in the world is that possible? Because if you're a realist and you understand why a stock market would go higher in a particular country, it's based on that particular country's economy. Well, if the U.S. economy is doing so poorly, how in the world is the stock market at record levels? So it's a head scratcher. People can't just understand how in the world that's happening. Now, most people don't look the gift horse in the mouth. If the market's going up, they don't care why it's going up. They just want to be part of it. They don't look at the fundamentals. They don't look at the technicals. They don't listen to what other people say. And the fact is that when it comes to money and managing money and trading your money, you've got to know what you're doing. Most people give their money to a money manager. And in most cases, those money managers don't know much more about the markets than you do. Their philosophy is, hey, if I put you into the stock market in general and the market falls, it always comes back again. Well, that isn't a great situation. If you look at 2008, when the Dow dropped from 14,000 to 6,500, most people got wiped out at that point. They were out of the market. They didn't participate when the market came back up to 14, then 17,000. So the bottom line is, who's in the market right now? It's the hedge funds, and it's Wall Street. Most of the middle class are gone. They've lost all of their money. Their jobs are not strong anymore. All the jobs, or most of the jobs, that have been produced in the United States under President Obama have been part-time jobs or jobs at a way lower rate. Back in the 1990s, and even going through 2002, 2003, up to 2007, when the markets were rocking and the real estate markets were rocking, some of us knew that there was problems ahead. We talked about the real estate market plummeting before it happened. We brought that up long before it happened, and most people thought that we were crazy. Very few people knew what was happening in the real estate market, and we called that market dead on. And look what the result of it is. Now, the fact is that so many people lost their homes, so many people lost their jobs, and those that were in the real estate business, either mortgage brokers or real estate salesmen or builders or whatever, during the good times made fortunes. But once that market fell and they lost everything, you're finding that it's impossible to get your credit rating back or to get your money back. So most of the middle class is in trouble at this particular point. All you have to do is watch Walmart stock to understand what's happening with the middle class. We brought up in several newsletters that Walmart is no longer America's shopping place. It's the dollar stores, because people are losing so much money and their jobs are not paying anymore, and the cost of living has increased so substantially that food prices have increased by 25% the first quarter of the year. And along with the fact, whatever the weather is going to bring this year, there's a 100% drought in California. Their crops are in horrible shape. On top of that, they have no water. And if it's an El Nino year, we may not see any rain. It could be a very, very cold winter and an early start to the fall that could really wreak havoc on the crops this year. So, again, there's serious, serious situations. And what Randy brought up about being negative or positive, it isn't a matter of being negative or positive. It's a matter of understanding what's happening in the world today and making a decision based on facts. If everything was rosy, if everything was phenomenal, we would be buying stocks and bonds and doing fantastic. But they're not. So the fact is that when the economy is not good and it's not growing, you don't invest in stocks. It's simple as that. Now, you may say, that I'm out of my mind because the stock market's going up. We all know why the stock market's going up. The stock market's going up because it's made to go up, because it's the only visible sign whatsoever that the U.S. economy is improving. And that's the barometer that people base it under. If the stock market's going up, everything's got to be okay. But the fact is it's not okay, because the reason the stock market's going up is not because the economy is doing better. It's strictly because of quantitative easing, money that was put into the market to boost the job market and that type of thing. And that didn't work. When they put trillions of dollars back into the marketplace in order to get companies back on track so they would be profitable again, so they could hire again, and America could get back to work. And in theory, it made a lot of sense what they were doing, but it never worked. And the job numbers are also bogus. We all know that. Everybody knows it except for Wall Street. And even if they did know it, they wouldn't care, because as long as the media is broadcasting only good things, then the market is going to continue to increase just based on that. But we've all been involved in bubbles before. We all understand what happened in 1999 when all the dot-com companies plummeted and the NASDAQ went from 5,000 to 1,000, and everybody that was in that market got wiped out. But if you remember the years before that, everybody was making money like it was going out of style. Every stock you were buying was doubling and tripling and splitting, and everybody was doing great. And it was like euphoria. It was like a license to print money. Everybody was talking, how much did you make today in the stock market? This stock. And then all of a sudden it plummeted. The rug was pulled out from underneath everybody. The market plummeted from 5,000 to 1,000 and has never gotten back up to that level, and that's been over 15 years now. So the bottom line is that you've got to be smart. When it comes to your money, we work very hard. Money is hard to make now. Money is much more difficult to make because investments don't pay off anymore. Real estate doesn't pay what it used to pay, and neither does the stock market. So the bottom line is that people are forced to try to speculate in other areas. And speculation is the worst thing that you could do at this particular point, because the markets don't make any sense. I personally have traded the commodity markets for 35 years and consider myself one of the best commodity traders. I've made a fortune in this market, not only for my business and for myself, but for my clients. And over the 35 years that I've been in this market, I've called markets that nobody else has called. And I'm not just blowing my horn, because I've done it visibly in front of millions of people on the radio and on television. And I'm saying at this particular point, I have never seen a more dangerous or confusing market than we have right now. And I'm out of the market. I have no stocks, I have no bonds, I have no retirement savings plans, and I have no problem sleeping at night because I have all my money sitting in physical gold and silver and diamonds. I know where this market is going to, because these markets always come back, and these markets will always trade on their own volition, and there is no way in the world that gold is not going to 2,000, 3,000, 5,000 or more with the problems that are inherent in the markets right now. And silver is going to $100, $150, and $200, and there is absolutely no doubt in my mind, and people that are much smarter than I am say the exact same thing. I don't put any credence in what Wall Street says whatsoever, because I don't have a penny of my money in that market. I would only put money into something that I totally believe has got the reality of happening, and I'm 100% positive and 100% convinced that I am in the right market at the right time. There is no doubt about it, and I recommend that you do the same thing. Get out of the stock market before it plummets, and get into the real markets, the hard asset markets, the markets that you own yourself. Own your gold, own your silver. Don't let anybody else own it for you. We will be able to ship physical gold and silver directly to you as soon as I'm finished with my deal with the mines in South Africa. We're dealing with this Ebola situation, and it's really slowed things down. But the bottom line is that it looks like gold and silver are not finished their decline at this point. We're in the slowest month of the year, the end of August. People are just going to get back to school. They're not thinking of investing at this particular point. In actual fact, this is a long weekend in Canada and the United States, and the markets are lethargic. We are in the right markets at the right time. There is no doubt in my mind, and I will continue to recommend and to buy gold and silver and diamonds until the economy and the markets tell me to change, and we're nowhere close to that point at this time. I'm a firm believer that we're 100% correct, and when all the dust settles, the listeners to our radio show and our clients will be the ones with all the money.
If you think the risk of a fire is high, you buy fire insurance because you definitely can't buy it after the fire. And if you believe that we are correct in our theses that you need an insurance policy in your portfolio, now is the time to speak with Harold about investing in hard assets, gold, silver, diamonds. The most secure and profitable investment, millions of years in the making, rare-colored diamonds. See some of the world's finest investment diamonds at rarecoloreddiamonds.com. It's like going to a museum online and seeing some of the most spectacular diamonds you will ever see in your life. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio, or receive a free copy of the weekly World Financial Report on Radio newsletter by going to rarecoloreddiamonds.com. rarecoloreddiamonds.com, or call 1-800-432-1022. 1-800-432-1022. If you'd like to speak personally and privately with Harold Siegel about investing, Harold will be happy to speak with you at any time. Connect with him, 1-800-432-1022, and you can check him out at rarecoloreddiamonds.com. Harold was on Fox Business News, Risk and Reward with Deirdre Bolton, and we have, he was on the show Monday of this week. We have video of that we can send out to you. Also, the Jerry Bonino Show. Harold was on for a full hour, and if you really want to get to know Harold Siegel well, watch this hour-long show, the Jerry Bonino Show, and it will really open up your eyes to what Harold is all about, not only as a person, but his investment philosophy. In our newsletter this week, some interesting quotes, and this one is from Ambrose Evans Pritchard, and he has been writing for 30 years for different newspapers over in the UK about world affairs and finances. He said, "In the 30 years or so I've been writing about world affairs and the international economy, I have never seen a more dangerous confluence of circumstances or a more remarkable complacency." And that's one of the things that we've spoken about on our show is don't be complacent. You need to have an insurance policy in your portfolio, a safety valve, in case we do run into another financial crisis or a major stock market plunge. Richard Russell, he is 90 years old, recently celebrated his 90th birthday. He writes the Dow Theory letters, and he was quoted this week as saying, "The Aden sisters, they flew up from Costa Rica to attend my 90th birthday. They have studied gold for decades. They are indeed gold experts. In their recent report, the Adens note that gold runs in cycles. Gold tends to form key bottoms every 7 to 8 years, and it forms key tops every 11 years. The Adens believe that the gold market is now in the process of forming a very important bottom prior to the beginning of a new bull market to start next year." And in our newsletter, and this is worth checking out in the gold section of our newsletter, we have another story that alludes to that. Ross Norman, who is a well-known gold and silver prognosticator, really believes that this year will be okay for gold and silver. We will see positive results, but look out for 2015 and 2016. He thinks that the markets will really take off. Also, Richard Russell saying, Back in 1930, an ounce of gold sold for $20.22. Consider that had you held an ounce of gold worth $20.22 and $20 in cash, today that ounce of gold would be worth $1,280, and your $20 would have lost 95% of its purchasing power. People holding gold for the long term have tended to retain their purchasing power. The opposite is true of the dollar. And he goes on to say, I continue to advise retention of gold and silver, both symbols of wealth, since biblical time. And Harold, that's really, and we have 3 minutes left in our segment here, that's really what we're talking about. Think about that. $20.
You're 100%. I'm sorry, Randy.
No,
you're 100% right. That analogy was perfect because, again, the longer you hold on to gold, it always will hold its value and increase in value as the economy allows it to. But the U.S. dollar lost 95% of its purchasing power. I mean, it sums it up beautifully.
It does.
And
go ahead,
the other thing, I'm sorry because we keep cutting each other off, but if gold was not a good investment, China buys 100 tons of it at a time. China and now Russia are buying all the gold that they can get their hands on. You can imagine what the vaults are like in China with all the gold that they've been buying for the last 10, 15 years, and they own most of the gold in the world at this point. So, again, unless they're stupid, and I don't believe that they are, they're going to back their currency with gold. And there's a reason why they're buying all the gold, and it's not just to own. It's for a specific reason, and I'm a firm believer that what they're doing is the right thing.
Richard Russell said about the stock market, what are the pros? What of those pros who are in the stock market? They certainly know the risks, so what are they thinking? They can't take a chance of being out of the market rally, and if things don't look right, they'll get out ahead of the next basically ahead of the next poor slob. But what if everyone wants to hit the exits at the same time? In that case, we'll have a crash. My choice is I refuse to play musical chairs with the stock market. I believe that somewhere ahead, the current financial system will tear itself apart. At that time, I want to be at the bottom of the pyramid. The bottom is pure, unadulterated wealth. It's called gold. When all is madness, the world will go to the base of the financial pyramid. The base of the financial pyramid is gold. Gold has represented wealth since biblical times. Gold has opened Alaska and the American West. When all else goes down the drain, the foundation will stand. That foundation is gold. Stop the first 10 people you see on the street and ask them how much gold they own. My bet is that not one of them and not one of these people will say that they own any gold. It's strange that nations have fought over gold, yet gold is despised and basically degenerated in America today. My prediction is that you and I will see the day when gold is loved and treasured in the exact opposite way that it is hated today. But as Richard said, back in 1930, an ounce of gold sold for $20.22, and $20 in cash at the same time. Today, gold $12.80, and your $20 bill would be worth 95% less due to its loss in purchasing power. And as we said, if you're thinking about risk and you're thinking about a risk of a fire and it's high, you buy fire insurance because you definitely can't buy it after the fire. Now's the time to get that insurance in your portfolio. Speak with Harold about gold, silver, diamonds at rarecoloreddiamonds.com or 1-800-432-1022. Coming back to talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August 29th, 2014. Our time is 9:16 Mountain in the morning. Radio show runs on your favorite radio stations, 6:30 CHED in Edmonton, Sundays at 3 in the afternoon. If you ever miss a show, they are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com, and we have a podcast through iTunes. Type in The World Financial Report on Radio. It will take you to our podcast. You can subscribe to it. We are portable. We go anywhere you do on your portable device. Don't forget, Harold's websites rarecoloreddiamonds.com, and the show is streaming there. You can listen to it anytime, and HESradio.com. The show is there, streaming as well. And Harold has his auction site. We'll talk about that shortly, hsfineauctions.com. Rarecoloreddiamonds.com is Harold's main website, and the telephone number to speak with Harold about our featured diamond of the week is 1-800-432-1022. This week's diamond is a 0.55 carat radiant cut fancy deep orangey pink argyle, and the color on this diamond is absolutely spectacular. Harold is a worldwide renowned expert on colored diamonds. He has been interviewed twice on Bloomberg Television with Deirdre Bolton, and as well he's been on Bloomberg Radio twice. And I should mention that when Harold has been on the television shows, and one of them was with Carol Masser as well on Bloomberg, the ladies absolutely loved the jewelry that Harold brought along with him. He was on Fox Business News with Deirdre Bolton. She transferred from Bloomberg to Fox for a new job. Her show is Risk and Reward, and Harold was on that show this Monday for 5 minutes. We have the video of it, and we'll be happy to send it out to you. Also, Harold was on the Jerry Bonino show, and we can send that out to you as well if you really want to get an idea of Harold's philosophy on investing and a little bit of background about him. But Harold, one story that you told us off air I thought was very interesting. You asked Deirdre if she remembered you from the last interview, and what did she say, Harold?
She said that women never, ever forget certain things. And she said, I will never, ever forget the day that I tried on Elizabeth Taylor's necklace. So it was a very good interview. Again, it's a great show, very popular. Millions of people watch it. And it opens up great doors for us. But the most important thing is that there is an interest, obviously, in alternative investments. Otherwise, we wouldn't be on Bloomberg and now Fox, 5 times now. So a lot of the media is certainly understanding the need and interest in alternative investments. I'm very proud of the fact that they tend to go to us as the experts. And again, it was a fantastic interview. Really enjoyed seeing Deirdre again. And Fox News is huge. So, it gets our face in front of a lot of people, and that's important to me, obviously. But the most important thing is to continue to build my business, and the business that we're building that they're most interested in is H. Siegel Fine Auctions, as the secondary market that resells diamonds and high-end collectibles that has never been done before. It's actually a virtual live auction where we sell diamonds and other high-end collectibles to our clients all over the world. If you were in China, you could literally be in your home, on your computer, attending our live auction from anywhere in the world. In fact, at the last auction that we had, which was a charity auction for the Susan G. Komen Breast Cancer Charity, we had people from all over the world attend. We had people from China, Kuala Lumpur, Australia, Europe, Canada, the United States, everywhere. And again, I'm very proud of this business because, again, how can an investment be an investment if it can't be resold? And that was always the stigma attached to investing in diamonds. And as somebody who's been in the commodity and financial business for 35 years, that is something that when I looked at what diamonds did, and I know how diamonds are. Diamonds come out of the ground as rough diamonds. If you're the mine owner, the only cost of bringing that diamond out of the ground is really your labor and the cost of running the mine. So basically, I know what the profit is in diamonds, and I've always known that certain diamonds are extremely profitable and certain diamonds have track records. However, there was never a way to resell those, and that's what we've been building for the last 3 and going on 4 years now, is H. Siegel Fine Auctions. It's the only company of its kind. It's the secondary market to resell diamonds, and we're continuing to build it and build it and build it and build it. And the difficult thing is that the products that we sell, the items that we sell, are expensive. The minimum diamond that we sell is $20,000. We have diamonds that are $30, $40 million. So who can afford those type of diamonds? Well, the bottom bottom line is that the $20,000 to $50,000 diamonds, there's many people around the world that can afford. In actual fact, we have many of our clients that daily are buying diamonds, Argyle pinks because the mine is closing, or yellow flawlesses because they go up by 15% a year. Those are our clients. We have way more clients that buy diamonds for under $100,000 than we have clients that buy diamonds over $1 million, for example. So we created the market for diamonds, and most of our clients are hard-working, everyday people that just want a decent return. You put your money in the bank, you get 1 or 2%, and we know that the banks are suspect at this point. You put your money in the stock market, and you could lose every penny of it. But put it into right diamond, and that diamond will increase by 15, 20, 25% a year, depending on the color of it. And what we did is we created the resale market for it. Now, what we had to do was go out and find high net worth clients, that buy our diamonds, and will buy them through the auction also. And in Canada, we did very well because a lot of our clients made fortunes with us in gold and silver and oil. On top of that, our clients from Europe are buying our diamonds at a huge discount because their currency is worth more than the Canadian and American dollar. So the fact is that when you try to break into the U.S. market, it's a more difficult market to break into because most U.S. investors are comfortable with stocks, bonds, and real estate, and alternative investments like diamonds and art and those type of things are not something that they're as knowledgeable about. So we have an education process. We do online seminars. We're constantly doing educational programs to help people understand about the tremendous, and I mean tremendous, opportunities investing in rare colored diamonds. Because the most important thing right now in an investment is not making money. It's preserving your capital, making sure that you don't lose it. And there are certain diamonds that have never, ever declined in value, ever. They've never fallen in price, and because there's so few of them, they continue to go up in value. So the bottom line is, with our business, we were having problems breaking into the United States because of the attitude of U.S. investors, mostly comfortable with stocks, bonds, and real estate. However, once we started doing work with the charities, mostly Susan G. Komen, and started doing a fantastic job for them and raising a lot of money, well, all of a sudden, it opened up a whole new spectrum of clients to us. People now that understood that diamonds can be used to raise money, to raise capital, as a strong investment. And now our list of wealthy clients are growing worldwide, and we're accomplishing exactly what we set out to do. We're going to have some phenomenal auctions coming up in the fall and winter of this year. We're going to try to hold at least 1 or 2 auctions a month, and we have some of the most amazing investment diamonds and diamond jewelry that you have ever seen. Investments that will make you money over time, that you can afford to buy at this time, that you can wear and enjoy, and then give back to us 5 or 10 years later and allow us to sell it for you at a profit. Because we only make a return when our clients profit. We get 10% of the profit, and our clients get the rest. So what the game plan is, put some of your hard-earned money into an amazing market like rare colored diamonds. Put a beautiful pink diamond ring on your wife's finger and let her enjoy that for 10 years while the mine is closing down and no more of these diamonds exist. Then 10 years from now, a diamond that you bought for $50,000, you could sell for $100,000, $150,000, $200,000, $250,000. These are the type of returns that we've seen in diamonds in the past under similar circumstances, and we anticipate to see these returns again. I've never been more excited about any market than I am about the diamond market at this particular point. I think we're dead on with what's happening in the world economy, and I believe that portable private wealth will turn out to be one of the most important factors for somebody owning an asset. You know, there's a lot of fear in the United States and different parts of the world of the government coming in and raiding our bank accounts, taking money out of our accounts, banks going under, bail-ins, that type of thing, the government confiscating gold like they have done in the past. All these fears are now present because the governments around the world are desperate. Look what Cyprus did last year. Cyprus went in, stole everybody's money in the bank, gave them worthless pieces of paper as a promissory note, and stole everybody's money and waited to see what was going to happen as a result. And because nobody got killed or shot or anything like that, it was accepted that the banks could do whatever they want, and that's what the result is. Now that's going to happen in Europe, and it is happening in Europe. We've read reports of it, and don't think it's not happening in Canada and the States. The negative reports on Canadian banks will absolutely shock you. And if you haven't heard about it or read the report, contact me and I will send you the report on the Canadian banks that are all getting negative reports on moving forward. I would be petrified if I had all my money sitting in the bank at this point. First of all, you don't want to do that because you're getting 1 or 2%. Number two, if you keep more money in your bank account than you have insurance, then it's not a smart thing to do, because if that bank closes down, you're only going to get back what the insurance is, not what you have sitting in your bank account. So you've got to weigh the risk and reward. You've got to look at the areas that are going to give you the greatest return or safety in your investments, and it's obviously not stocks and bonds at this point here. You know, the commodity markets are volatile, and we know that they're manipulating gold and silver at this point. That will not last for much longer. Again, China is buying 100 tons at a time. There's a reason for that. We're very, very bullish on gold and silver over the long term. We know short term the market's going to fall further, but this market is building a base, and when it takes off, it's going to be like a freight train. And diamonds are one of the best investments you could make. Just look what's happening at auction. So basically, we recommend, if you're in the 20, 25, 30 to 50,000 range, look at these yellow flawless diamonds. They increase by at least 15% a year. The Vivids do better than that. They never, ever decline in value, and we can sell those diamonds for you 10 years down the road at a very, very nice profit. The Argyle Pinks are amazing investments, starting at about 50,000. Now, do you remember, Randy, 1 and 2 years ago, you could have bought Argyle Pinks for 20,000. Now the cheapest ones are in the 50,000 range. The least expensive are in the 50,000 range. And a year and 2 years from now, we're going to be saying that you can't get into this market unless you have 100 to 200,000. And when the mine closes, because they produce all of the pink diamonds, 95% of them, the prices of these pink diamonds will go ballistic, just like blue diamonds have gone up 1,000% in the last 10 years. Now, you may say to me, who's going to buy these diamonds when the prices get to that level? There are more wealthy people in the world right now than any other time in history. The rich have gotten much, much richer, and the poor have gotten much, much poorer. And the middle class is shrinking every single day. We're building our business based on safe, alternative assets that are going to get the results for you that you need. Rare colored diamonds have never declined in price, and in this type of economy is one of the best investments you could ever make. And I'm very proud to say that our company is the only full-service firm that deals in investment quality diamonds. And when I say full service, we own rarecolorediamonds.com, which, as Randy says, is like a museum for rare colored diamonds. We have the most beautiful diamonds starting at 20,000, and we have diamonds going up to 35 to 50 million. We have a 100-carat perfect deep flawless diamond worth over $35 million. Most of our clients invest under $100,000 because they want an asset that is safe and that will do well for them, and that's the yellow flawless and the pink diamond market. So, Randy, I'm ecstatic about what's happening in diamonds, and obviously people want to know about it. Otherwise, they wouldn't have had us on Fox, Jerry Bavino for an hour, and all the times that we've been on Bloomberg and other interviews. So, again, I'm very proud of the way the company is growing, and my clients will do very, very well in the diamond business moving forward over the next 10 to 20 years.
And Harold has always had an open invitation. If you would like to speak with him about your personal financial situation, learn about hard assets, you can do that by connecting with him at rarecoloreddiamonds.com or call 1-800-432-1022, 1-800-432-1022, or go to rarecoloreddiamonds.com. Our featured diamond this week is a 0.55 carat radiant cut, fancy deep orangey pink Argyle. You can see the video of the diamond under the featured diamond banner at rarecoloreddiamonds.com. In our newsletter, we have a picture of it. You can check it out online or in our newsletter. This would be a great addition to your diamond portfolio. And speak with Harold today about starting a diamond portfolio. Obviously, the most secure and profitable investment, millions of years in the making, are rare colored diamonds. See, really, the world's finest investment diamonds at rarecoloreddiamonds.com. It's a museum online. And Harold has vaults of diamonds that are museum quality, investment quality, that you can invest in today. Nature's art, private, portable, stable wealth. speak with Harold about starting your own diamond investment portfolio. And in fact, speaking of diamonds and museums, a rare 12-carat blue moon diamond is going to be unveiled at the Los Angeles Natural History Museum. It's one of the most stunning blue diamonds on the planet, very, very rare, and you can see a story in our newsletter about that. But that gives you an idea of exactly where we're coming from when we talk about the rarest of the rare, which are colored diamonds, and where they are exhibited in, obviously, museums at times. And get, as Harold was saying, get our free weekly newsletter. In the newsletter, we have the Fox Business News interview, we have the Jerry Bovino interview, and we have the Bloomberg interviews. They are all must-sees. And I can tell you, as we've been quoting throughout the show, if you think the risk of a fire is high, you buy fire insurance because you definitely can't buy it after the fire. That's, Harold, why we're advocating hard assets, diamonds, gold, and silver as an insurance policy in your portfolio as a result of what's happening in the world today financially and geopolitically.
Couldn't have said it better, Randy. Again, the markets will do what the markets are supposed to do. In desperate times, certain things happen. Governments can do things. You've always read that you can't fight the government type of thing. This is all going to play out. When we first recommended gold, it was at 250. It went all the way to 1920, back down to 1180, and it's sitting right at around 1300 right now. Still not a bad return on people that have bought gold at 250 and people that bought silver at under $4. However, the gold market should be substantially higher than where it is right now, and the U.S. stock market should be substantially lower than where it is right now. So we know that the markets are out of whack because it's made to be that way. But there's not going to last much longer, and there's no way in the world that we're not going to have extremely high inflation, and gold and silver and diamonds have always been a hedge against inflation. So if you believe we're going to have inflation, you need to be in those markets.
And Harold, talking about inflation, Dr. Philippa Malmgren, we've spoken about her before. She really summarizes inflation this week, and we have it in our newsletter. She says there's a growing gap between what central banks are telling us about inflation versus what people are really experiencing in day-to-day life. There are a lot of reasons for this, but I think it's important to understand that states are broke, and therefore they are looking at ways to default on their own citizens. And inflation is one of those mechanisms. So it's not surprising they don't tell you that what they are doing. But you see it when you go to the grocery store. We just hit an all-time high for the price of beef. And in a rather disturbing example, there's something called pink slime, which is the worst cuts of meat that have to be treated with ammonia in order to be edible. And that price has gone up as well because businesses want to use the filler instead of paying the full price for beef. So this kind of degradation of what you are getting means you're paying more and getting less. We're seeing it in the size of things getting smaller, or what I call shrinkflation. We're also paying the same price for the Coke can that is not as big as it used to be. So you're actually paying more per weight. And she goes on to say, if you look at the data, things like airline tickets are going up by 2.7% versus the official inflation rate below 2%. If you look at things like what hotels are charging for a stay, they are adding all these new fees such as $2 to store your baggage for the day, or other small fees such as $1.60 if you want to use the in-room safe. If you put stuff in your own minibar, they will charge you as much as $27 for that. If you want to print your own boarding pass, that could be as much as $10 a transaction. Also, if you want to skip the check-in line, the fee would be $25. And to actually restock the minibar is an 18% administrative fee. These things are all telling us that the actual price that we are having to pay for regular things is higher than what the government statistics say it is. So it's a kind of healthy, hidden, stealthy inflation that is very real, and she calls it in some incidences shrinkflation. And I do my own shopping. I see it all the time when I go out shopping. you see packaging being changed, and you're basically paying the same price, if not more, and yet you're getting less. And Harold, they're not taking that into account with inflation. We are being hit by inflation. They're just hiding it from us. So the average person knows that.
Well, I think that they know it, but they're so concerned with just getting by today, that it registers or it doesn't register, or when they see it on their pocketbook, because again, most people stretch their money to make it work for them, and then they have to start cutting things out, going to the movies, going out for dinner, going on vacations, that type of thing. So, the fact is shrinkflation does make sense. And again, we're aware of it. All you have to do is open up a bag of chips today and find out that there's really nothing in that huge bag except maybe a quarter of the chips when it used to be full. So there's no doubt about it. It's a game that they play in order to try to confuse you. But the bottom line is that people are not stupid. And when it comes to their money, they understand exactly what's happening with it, and they see it shrinking. And that's inflation. No matter what the government says, people know that their money is not buying what it used to, and that's all there is to it.
That's why we advocate hard assets. Invest in things the government cannot print. We're talking about diamonds. Diamonds cannot be printed. Dollars can be printed. Inflation numbers can be fudged. Gold and silver, they cannot be printed. Dollars can be. You want something that is finite, not infinite. You want the rarest of the rare. And that's why we advocate rare colored diamonds. RareColoredDiamonds.com. Featured diamond of the week, a 0.55 carat radiant cut, fancy deep orangey pink argyle. This is the rarest of the rare, museum quality, an investment that if you were to start your own diamond portfolio, you would want to tuck away and have for many, many years. Obviously, it will help you fight inflation and yet at the same time be an insurance policy in your portfolio if some people are correct that we start to see plunging stock markets at some point. When they unwind quantitative easing in the United States, what exactly will happen? That's why you want to obviously have the fire insurance before the fire, not after. And that's why we're advocating hard assets. And Harold, inflation is real, and obviously what we're seeing around the world geopolitically, it is real as well. And quite easily we can wake up, as we're finding out today, as we're taping the show, that Russia has gone into the Ukraine, and the president of the Ukraine believes that they're at war with Russia.
You bet, and that's not the only situation that is of concern. Obviously, Israel and Hamas and all these other situations. 20,000 people affected by the Ebola virus is frightening to think that that is happening in this day and age. And there's just so many things geopolitically happening at the same time that economically things are not good. So it's a very, very concerning time. Again, these are all these reports are in newspapers. If you dig for them, and different medias, if you dig for them, which is what Randy does all day. He looks for these articles that are of importance to us and does a lot of work putting this newsletter together each week. It's one of the best newsletters on the market. We don't charge for it because we want you to have the information you need to make an intelligent business decision. We don't charge for the radio shows, obviously. We don't charge for seminars. We do free online seminars. We don't charge for our newsletters. We only make a profit when our clients make a profit. So, again, I'm very confident in what we do, and again, I'd be very foolish if I did all this for my clients not to make any money, because I would just be spinning off of our wheels and wasting everybody's time. But I can assure you that is not what the situation is. I'm positive that the markets that we're in at this point are the right markets to be in, and we're going to see over time who ends up being right on this. But I basically put all of my money into these markets, and I have no problem sleeping at night.
Thank you very much, Harold Siegel, for your knowledge and another show, and have a good long weekend.
Well, thank you very much, Randy. I wish everybody a wonderful day, very profitable day, and a wonderful long weekend also.
Don't forget, get our free weekly newsletter. If you're getting another newsletter from another source, you're not getting the World Financial Report on Radio newsletter. We send it out via email free of charge every week. It's the companion to our radio show. You will be on the exact same page and reading the same articles that Harold and I are talking about. If you're getting anything else, you're not getting what we have. And I would encourage you to speak with Harold and get your name on the list for our free weekly newsletter. As well, get Harold's interview with Fox Business News, Risk and Reward, the interview with Jerry Bonino, and definitely speak with Harold about investing in hard assets today. RareColoredDiamonds.com is the website. The telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.